So our guest speakers today are James Hall, Affordable Lending Manager with FreddieMac. We also have Rita Bellinger, Business Officer with CHFA, Connecticut Housing Finance Authority. We have on the phone with us, we have Marino, Vice President from Liberty Bank. And also joining us is Pam Days, Community Development and Outreach Officer for Liberty Bank. So we're going to kick it off with James Hall. Jim joined FreddieMac in 2018 as their single-family affordable lending manager to promote the FreddieMac HFA Advantage mortgage program to HFA's lenders and realtors. Prior to this, Jim worked at the New Jersey Housing and Mortgage Finance Agency and was responsible for business development while being an advocate for affordable lending for workforce families and the underserved. Prior to that, he worked in the private mortgage industry for 20 years. He has a bachelor's degree in business administration from Rutgers University. And welcome, Jim, and thank you for joining us.
Thank you, Bernadette. It's my pleasure. And it's amazing that it has been 10 months since we've, spoke and myself and Rita presented to your members of your association. How time flies and how the environment has changed. And so it's my pleasure to be back. And I guess Rita and I passed the audition in July. So thank you very much. Everyone out there in the audience, on my screen there, you can see my email address. It's james_hall@freddiemac.com. So, please jot that down and, feel free to reach out to me if you have any questions or, you need some advice on affordable lending and housing. I'm always open to interacting with, our realtor friends and lender friends, throughout the country. As Bernadette had mentioned, my background has extensively been in affordable lending for, quite a while. I've been with FreddieMac for 3 years now, worked for New Jersey Housing for 12 years. So it's really my passion to help workforce families and the underserved attain the American dream and home ownership. So really, I always like to start with, speaking about FreddieMac. And, a lot of people really don't know what FreddieMac is and what we do. We're a government-sponsored enterprise. We've been in business since 1970. We celebrated our 50th anniversary last year, which we were very proud of. We were created and chartered by Congress. So our big sister, Fannie Mae, and us, what we do, we're mission-based organizations. We promote liquidity, stability, and affordability in the housing marketplace. And we also have community missions, which help stabilize communities and expand credit, prevent foreclosures, and educate future home buyers and counseling homeowners. We have 3 main business lines. The single family side, which I'm part of, and that's 1 to 4 unit properties. The multifamily units, which is 5 and more units, and our capital markets division. Our business is built on 4 main pillars. One is insights. We have a tremendous data and analytics team, which gives us a lot of information to share with real estate professionals like yourselves and lenders and nonprofits and housing counseling agencies, in our industry. We also have innovative mortgage products, and those products are shared with business partners like Connecticut Housing and Liberty Bank, who are, very important partners with FreddieMac in, the affordable lending arena. We also really promote education and, not only educating real estate professionals and lenders, but really, focusing on educating the public. Because what we found is that, financial literacy is really critical to any transaction that we, are involved in. And we also provide business solutions, which are resources and tools and technologies. And I'll share, some of our tools with you that will really help you, you know, in your day-to-day selling strategies. I've always loved this chart that we created here. This is the affordable ecosystem, and it really takes, you know, a lot of hands to make home possible. And when you're a first-time home buyer coming into the market, you can be really overwhelmed, you know, with, you know, the whole process. Now, if you look at this bubble chart here, at the top, we have put real estate professionals like yourselves and loan officers, which are lending institutions, work at lending institutions like Liberty Bank. Why are those two at the top? Because really the genesis of the transaction starts with you, the realtor, and then you hand off that, you know, potential borrower to a loan officer. So it's very, very critical that they get off on the right foot and have the right information available to them, because everybody here listed, you know, in this bubble chart, you know, we're all fiduciaries for the consumer, and you know, the basis of being a fiduciary is trust. So the potential home buyers coming to you with trust that you're going to, you know, find them the right property that is most affordable for them, and then the loan officer is going to present them with the best program that meets their needs. So I want to talk about housing finance agencies. Like I mentioned in my introduction, I worked at one for 12 years down here in New Jersey. So housing finance agencies are near and dear to my heart. I interface with housing finance agencies up and down the East Coast. Connecticut Housing is a great partner of ours, and they are mission-based, just like FreddieMac. So why are housing finance agencies out there? How did they come about? So in the mid-1960s, when Lyndon Johnson was president, his vision for America was called the Great Society. So he's most famous for, you know, signing the civil rights legislation and the Voting Rights Act in 1964 and 1965. But a lot of people don't know that, you know, he brought about the Fair Housing Act, which was signed in 1968. So with that, Johnson's administration was, you know, trying to, you know, increase affordable lending and housing, you know, to workforce families and the underserved. But they knew they couldn't just do it on a federal level. So they took the idea to the states and communities throughout the country, and states and counties started creating housing finance agencies like Connecticut Housing and like my alma mater, New Jersey Housing, because, you know, the states are the experts in their communities. They know where the needs are. So my old housing finance agency was created in 1967, you know, through that wave. Rita will be able to speak to when Connecticut Housing was created. FreddieMac was created through that wave also in 1970, as I mentioned earlier. And many other housing finance agencies through the country were created in the 60s, 70s, and 80s. So they're the perfect partner for FreddieMac, being, you know, mission-based, focused on affordable lending. FreddieMac launched a program that is specific for lenders to use through a housing finance agency. It's called HFA Advantage, and it's a 3% down loan program. So it's 97% LTV. So that makes it much more affordable for the consumer versus an FHA loan, which is 96.5% LTV. So the consumer saves that 0.5% that they don't have to bring to the table as a down payment in this transaction. We allow the housing finance agencies to, you know, set their income limits and determine their their home buyer education requirements. Another affordable function of this loan is that it has charter level mortgage insurance. And I'll illustrate that for you in a few moments. So housing finance agencies have had a tremendous role and impact, you know, within our affordable ecosystem. Like I mentioned, they've been doing it for over 50 years. We're proud to partner with them. They're serving low to moderate income folks. And within the, you know, the last half a century, they have helped rehabilitate and the purchase of more than 7 million affordable homes for $450 billion in financing. So that is a major, major, number that, is really helped sustain the affordable lending and the housing industry. So some highlights of the HFA Advantage program. It is for 1 unit primary residences. It can be used for purchase and no cash out refinancing. That's determined by the Housing Finance Agency. As I mentioned, it's 97% LTV, 3% down. It has a total loan to value of 105%. So that allows for secondary financing to be put behind the first mortgage. All of these loans have to be underwritten through FreddieMac's Loan Product Advisor, which is our automated underwriting system. So if Liberty Bank was going to originate one of these loans, their underwriters or loan originators would put the loan through what we call LPA, Loan Product Advisor. No reserves are required, but I always encourage, if there is, cash in the bank, put it on the application because it helps with the credit decision. And as I mentioned, income limits are established by the Housing Finance Agency, and we have flexible MI. So it really is a nice alternative and cost saver versus FHA. I'm not here to bash FHA loans. They have a purpose in the affordable ecosystem, but they're much more costly than a conventional loan. And if your lender is more focused on FHA lending, and they don't know about this program through Connecticut Housing, please make them aware. And I mentioned earlier the charter level mortgage insurance. On a traditional standard conventional loan at 3% down, if you look in the bottom right-hand corner, the consumer pays 35%. On the HFA Advantage, they're saving almost half. We've reduced it to 18%. And our whole goal here is to, increase, affordable home ownership. So, we've subsidized the mortgage insurance on this program, to meet those goals. And Rita and Pam can, discuss how they use these lower MI products with their consumers later in the discussion. Housing finance agencies, again, really reach the underserved borrowers and markets in our communities. This is a nice illustration from the National Council of State Housing Agencies with data that they compiled through 2019. All home buyers in the United States, the average median income was $93,200. Home buyers that went through housing finance agencies was just a little shy of $51,000. So that shows you how housing finance agencies and illustrates how they are helping, again, the workforce families and the lower to moderate income folks. FreddieMac right now is really making a major effort in helping borrowers of color. We've set up a division that's focusing on bridging the gap between white home ownership and borrowers of color. And you can see from this chart here that this dates back to 2001, and the red line are loans made by housing finance agencies versus the blue line, which is the market. So many years, housing finance agencies are either at the market or above the market. So again, it's a great partnership with Connecticut Housing, where we are out there trying to increase home ownership and bridge the wealth gap with borrowers of color. And I mentioned one of our main pillars at the beginning of the discussion about our resources and tools. And you as a realtor, I would encourage that you sign up for our Real Estate Professional Resource Center. We promise not to spam you or bombard you with emails. What you will get is information that is really pertinent to day-to-day selling strategies, trends that could help you, business ideas that can help you empower yourself. So I know Bernadette said she is going to send out copies of our PowerPoint presentations to you, so you have these links here. So again, like I said, please sign up for this. I think you'll find it quite valuable. And as I mentioned earlier, also one of our main pillars is education, financial literacy. And FreddieMac has had the Credit Smart financial education program for many, many years. Actually, 20 years this has been in existence. It teaches, prospective home buyers, from soup to nuts, as far as, really prepares you to going from being a renter to a homeowner. There's 12 modules that they can do on their own pace. And now that we're coming out of the pandemic, these Credit Smart seminars can be done in person. And what's really exciting is that you, the realtor, can become a Credit Smart certified instructor. So if you have any desire to really be a community leader, to educate the young millennials and the generation coming behind them in, the ins and outs of home ownership, I really, really encourage you to look into this. I gave you my email address earlier. If you're interested in being a Credit Smart instructor, I can introduce you to the people that manage this program for us. I know that the courses are going to start in fall for our Train to Trainer program. And this is very, very popular throughout the country. You can hold sessions at your office, in churches, community centers. You can take it to high schools and colleges. And I can almost guarantee you that people that, sit through your class will remember you, and it will definitely encourage referral business. There's nothing like word of mouth. And part of Credit Smart, we have HomeBuyer U. And this is the part of Credit Smart that just focuses on home buyer education, where the entire Credit Smart suite takes a look at total financial literacy. This focuses just totally on being a homeowner. It's an interactive presentation. It's now available in Spanish. I know my slide here says it's offered in English only, but we are proud to announce that it is offered in Spanish now also. It's 6 modules, and again, it's an interactive presentation. I highly encourage you to take a look at that. And with that, I'm going to wrap it up and turn it over to Rita. But you are the critical link. Like I mentioned earlier, the genesis of the transaction starts with you. So you really set the tone for the home buyer, going through this journey of becoming a homeowner and getting financing, through institutions like Liberty Bank and Connecticut Housing. So, please take advantage of our resources. Dispel the myths out there that conventional lending needs 20% down. I illustrated for you, it doesn't. It can be 3% down. And, we are here to help you. So, thank you for joining us today. I'm going to stop sharing my screen so Rita can take over and talk about Connecticut housing. So Rita, it's all yours.
Okay. Everyone hear me okay?
I hear you fine, Rita.
Okay, great. Thank you, Jim, and thank you, Bernadette, for inviting CHFA to participate today. I'm going to try to give you as much information I can in a small amount of time as I can. There have been so many recent changes at CHFA, expanding affordability, and we can't do it without your partnership. Of course, technology is always the biggest challenge. So CHFA's mission, we are a self-funded quasi-public organization, and we are dedicated to alleviating the shortage of housing for low and moderate income families and persons in the state. So the key things there are we are self-funded. Number one myth, we do not utilize taxpayers' funds. We generate our own funding for our below market interest rate mortgages and down payment assistance. So our sole purpose is to make it more affordable for housing for Connecticut residents. As Jim stated, we were created just over 50 years ago by the Connecticut State Legislature, and we were created to be that self-supporting agency. Last year alone, we helped over 32 individuals and families become homeowners through our below interest rate mortgages and second mortgages for the down payment assistance. So this is kind of the life cycle of our funding. So we receive our bonding authority from the state. That allows us to issue tax-exempt mortgage revenue bonds that are for sale on the open market. And the proceeds of those sales come to CHFA, and that's what funds our mortgages. So how is CHFA different? So the main thing is we do not self-originate, right? We count on our partner lenders to originate, process, and close our CHFA files. And on our list of approved lenders, you'll find banks, mortgage companies, and brokers. And our interest rates will change at 9 a.m. daily if they will. So any loan partnered with CHFA will utilize the CHFA published interest rates. So some of the key benefits are our below market interest rates. That second mortgage that's only available if the first is partnered with CHFA. Second mortgage can be used for any remaining down payment. And now we've also brought back the use of closing cost assistance also. CHFA has always offered free homebuyer education. We have targeted areas in the state where there are incentives, and we offer specialty programs that we'll go over that can be partnered with any CHFA first mortgage. So if you haven't already, I encourage you to visit our website, chfa.org, and we are going to go over some highlights of the website. Lots of resources for our partner realtors there. On our website, on the home page, we invite you to enter your email address to stay in touch with CHFA. You can sign up for just the interest rates, any bulletins, news, and announcements. So when CHFA issues any changes, expanded guidelines, anything like that, we send out an electronic announcement, and realtors, individuals, can sign up for those same announcements. And once they're sent out, they're also published publicly on our website. So some of the key features of the website, there's one click away for homebuyer education, free education offered in person or Zoom format or truly online module, how you access our CHFA approved lender list, sales price and income limits is a simple click. The resource map is a handy interactive map of the whole state where you can identify all of our guidelines, topics of our guidelines by town. Loan status information, probably the most popular one, where you can type in a property address and see the status of that file being reviewed by CHFA. Current turn times are 24 hours or less. We also publish our interest rates right on our website. On the home page, you'll see one interest rate. You want to click on the one that says residential. That'll open the page for every CHFA product with the corresponding rate. Again, when you sign up to stay in touch with CHFA, you can choose bulletin, news, and announcements, interest rates, if we have any REO properties for sale, and tip of the week. So our CHFA approved lenders for both buyers and realtors, if you're looking for a CHFA lender to partner with, there's two ways to access our CHFA approved lenders. If you click on that quick link circled there on the home page, that will open our list of lenders in an alphabetical descending order. Or you can click on a lender activity report. We keep an ongoing lender activity report, and that shows our lenders that use our program more frequently. So that's just another handy tool. Homebuyer education is one click away from the home page. Borrowers have the choice of in-person, a Zoom format, or truly an online module for anyone with an application currently in process. And anyone buying a multifamily home, we also offer landlord education. So that first-time home buyer, for our bond compliance, the first-time home buyer is either truly someone that has not owned a home before or has not owned a home in the last 3 years. If they are purchasing in a targeted area, they may be eligible for CHFA financing if it has been less than 3 years. Income limits, we have income limits that vary by town and county. The income limit is determined by how many people will be living in the residence, and we'll look at that. There are times when the income limits may be waived. We have sales price limits. Sales price limits will always be in effect. They vary by town and county and may be higher in targeted areas. Homebuyer education, a CHFA approved homebuyer education is required for any loan partnered with CHFA, but it's always free. So some of the benefits of purchasing in a targeted area, the borrower would receive a 0.25% discount on the CHFA published rate, regardless of which mortgage program they are utilizing. That first home buyer requirement is waived, so it doesn't have to be 3 years since home ownership. Although remember, a home buyer cannot own another property, cannot retain ownership of another property at the time of closing. And the income limit may be waived if they're receiving a government financing program and they don't need our CHFA down payment assistance. So if they are utilizing a conventional program and or our second mortgage for down payment assistance, the income limit is not waived, but it may be higher than the rest of the town. So CHFA targeted areas, we said that there's some areas identified in the state as targeted areas, and in those areas we offer some incentives. So a couple ways to identify targeted areas. The first picture here is our resource map, that handy online interactive tool, and you'll see in the blue ribbon, there's topics that you can select. I've selected targeted areas. It will shade areas in towns that contain targeted area census tracts. You can expand that right down to street level, or you can look at our income limit and sales price page in a PDF list version. If that's easier, you can see which towns contain targeted areas. And how do I find out if my property, right, because it goes by census tract, is located in a targeted area? Since it's a federal designation, you'll go to the federal website, ffiec.gov. You'll type in the property address, and the most accurate most efficient way to get accurate results is by specifically typing in the street address, comma, and zip code, okay, to get the correct census tract. Especially states like Connecticut with lots of villages and boroughs, using those things can skew the results. So this is the most accurate way. So you see I've typed in 99 West Street, right? And my zip code, and then my census tract is circled there on the right. And I'm just going to maybe back up one screen. And then you can see that correlates with the list at the bottom there of a town that contains a targeted area. So that's how you find out if your property is in a targeted area. Our income limits. Our income limits, you'll see that there's 2 columns in blue. So the dollar amount is determined by the number of people that will live in the household. So I'm going to locate the county, I'm going to locate the town, and then I'm going to determine how many people are going to live in this household. So that will give me which number of the income limit will apply only to my note signer. It is not household income limits, okay? It is only any and all sources of income for my note signers. So any and all sources of income, regardless of what needs to be used for qualifying or repayment. So some that may be frequently overlooked or not thought of would be, say, like child support ending in a short amount of time, or a recently established maybe part-time job. So it's any and all sources for the income limits to determine if the loan could be partnered with CHFA. Sales price limits, like we said, sales price limits will always be in effect, but you can see in bold and with an asterisk there, identifies targeted areas. You can see that sales price limits in targeted areas may be higher than the rest of the town. Property eligibility. What type of properties can be partnered with CHFA? That would include single family homes, townhouses and PUDs, condominiums. Condominiums, lots of myths about that. CHFA does not approve condos, nor do we maintain a separate condo list. The condominium must be approved by whichever first mortgage your borrower is utilizing, okay? That being said, if the condo is deed restricted for affordability and it's not acceptable to an investor or insurer, the lender, if they have a qualified applicant, can submit those condo docs to CHFA for review for affordability restriction only, and we will participate if we can. Our legal team will be happy to review those. Multifamily homes that have been residential properties for at least 5 years, that means no recent conversion. So you know that's FHA and Fannie Mae only. The FreddieMac, HFA preferred, under the, HFA Advantage, under the Advantage program only does single families. Newly constructed 2-family homes are allowed if located in targeted areas. And what types of mortgage programs can be partnered with CHFA? Any of the following mortgage programs that your partner lender is approved to originate. FreddieMac specifically has the HFA Advantage. Fannie Mae uses the HFA Preferred product, and CHFA created last year a hybrid conventional loan called the CALP, or Conventional AMI Loan Program. And for the government products would be FHA, VA, and USDA. So any loan partnered with CHFA will be a 30-year. It'll utilize the CHFA correspondent fixed interest rate. It will have either a 0 or 1% origination fee, that is borrower paid, lender retained. So that's a recent change. We brought back that 0 point option, very popular. Must be owner occupied as long as they have the CHFA loan. Non-occupant co-signers are not eligible for CHFA, and no additional names may be added to the deed. Until further notice, all first mortgage guidelines regarding COVID apply to all loans partnered with CHFA as well. We know there was important changes, if you're not aware, last year that HFA Advantage and HFA Preferred, Fannie and Freddie made to their programs that affected borrowers whose qualifying income exceeded 80% of AMI. So therefore, to move forward with an HFA Advantage or HFA Preferred reservation with CHFA, that qualifying income would need to be below Fannie and Freddie's AMI income, qualifying income AMI chart. Maximum DTI without our second mortgage for down payment assistance would be 45%. And reminder that income limits are not waived in targeted areas, but they may be higher than the rest of the town. Maximum total debt ratios without a CHFA down payment assistance would be 45-45. Maximum ratios adding our DAP loan would be 35-45. That's a recent increase only. No exceptions to that, other than there is one teacher eligibility qualification where their total debt to income ratio may be at 50% with student loans and repayment. You can find more details on our teachers program page on our website. And this is a sample of the significantly reduced PMI by partnering those conventional products with CHFA. So reduced PMI, the lower interest rate of CHFA, and the ability to apply for our second mortgage for down payment assistance. So since Fannie and Freddie made those changes, for any conventional loan, a lender now has to do 3 income calculations. One that they always did for that qualifying repayment income, right, used to calculate the DTI. One that they always did when partnering a loan with CHFA is any and all sources of income at the bottom there. That must be within our income limits and cannot be waived, right, in targeted areas. And that newer one that Fannie and Freddie implemented required the lender to calculate the borrower's AMI qualifying income. And if that 80% AMI is, if that qualifying income is within Fannie and Freddie's AMI calculation for 80% AMI, they would move forward with the HFA Preferred or Advantage product. But if it's above the 80% AMI, they could still move forward with that CHFA Hybrid CALP program. Okay, that allows them to enjoy the benefits of a conventional loan, right? Still reduced PMI, CHFA low rate, and without those additional costs involved that Fannie and Freddie made those changes. However, no income lower than base can be used for that AMI calculation. This is just a sample of Fannie Freddie's conventional AMI chart. This is not a recent chart. This is just an example of what the lender will utilize, and any questions they would contact Fannie Mae or FreddieMac. So that CHFA conventional product, so that was in response to Fannie Freddie changes that would have increased costs to some buyers if moving forward with the conventional financing. It required the lenders to either charge increased mortgage insurance or loan level pricing adjustments. That wasn't in line with our mission to create affordable housing for Connecticut residents, so we created that CALP product. So it allows them to still use our CHFA non-government conventional rate at the time of reservation. They can still do insured or uninsured. DU or LPA findings are required. This is an example of the PMI coverage. So it's still reduced PMI compared to not doing a conventional loan partnered with CHFA. And again, income limits are not waived in targeted areas, but they may be higher than the rest of the town. So these are our specialty programs, and these can be partnered with any CHFA first mortgage, and these have not changed. We've had these, a lot of people don't know. So eligible police, teacher, or military may be eligible for an 1/8 off the CHFA rate, right? And down payment assistance is also available. Home of your own, anyone in the household that's disabled, again, may be eligible for an 1/8 off their interest rate. Anyone coming out of leaving public housing would be eligible for an 1/8 off the interest rate. We do offer an FHA 203K rehab loan that can be partnered with CHFA. And we have recently brought back our mobile home program and added a refinance program with that also, and that is offered for us through Capital for Change. So that's been very popular. Great to check that out. So our down payment assistance program, that is a true second mortgage. It is only available if the first mortgage is partnered with CHFA. That's probably the #1 call I get. I'm using ABC lender and I just need the DAP. Can't do it only if the first is partnered with us. It allows your buyer to purchase with 0% down. The low interest rate second rate mortgage, actually there's a special going on right now through the end of the year that DAP's registered now to the end of the year are at 1% financing. So that's a recent change. Other than that, normally the interest rate would match the CHFA below market first mortgage interest rate. Again, that DAP will be 30 years, 1% fixed rate. The second mortgage is fully amortized with a payment due monthly. The minimum loan amount for a DAP is $30,000. Maximum is $20,000. And the maximum combined loan to value with the first mortgage and any other approved subordinate financing is 105%. So you can see it greatly expands their affordability. Another recent change was that we removed that DAP asset test where borrowers were required to utilize any assets over $10,000 towards the transaction. We have removed that. So that has been very popular. That DAP is a true second mortgage, so we allow additional fees for the lender to collect for that second mortgage, but for the DAP, the fees cannot exceed $550. It may be broken down into the following ways: $250 for application, actual cost for recording and prepaid, and a maximum settlement agent fee of $200. So just a reminder, CHFA has no fees, okay, to the lender or borrower for participating with CHFA. So it's only benefits both the lender and the borrower having their loan partnered with us. This is just an example of some approved community seconds acceptable by CHFA. So as long as your partner lender is approved by these entities, we have, over 75 that we have approved along the way. We play well with others. That's the key thing there. And our DAP is always available also. Our available resources, these are just some key highlights on our website for recent changes and where you can see our bulletins that are published. And we have a dedicated email address to our realtors, our realtor inquiry at chfa.org. Any questions or guidelines you'd like to know, we're happy for you to go directly to the source. So thank you again for attending. We'll be happy to, anything that you need, please contact us and we'd like to meet your needs.
That's a great presentation, Rita. I always enjoy partnering with you on these events. You really illustrate the important programs that Connecticut Housing provides to the constituents of Connecticut and also the real estate industry, being realtors and lenders. So thank you. Like I said, it's always great being able to do these events with you.
Well, thank you. It's a team sport.
Yes, absolutely. Okay, so now we're going to have another great partner of FreddieMac, Liberty Bank, and our friends Pam and Ann are going to present to you the affordable lending programs and other programs that Liberty Bank brings to the people of Connecticut. So Pam and Ann, the time is yours, and thank you for being here.
Well, thank you, Jim. My name is Ann Marino, and I'd like to thank both Jim and Rita for being great partners of Liberty Bank. We use both the CHFA and the FreddieMac programs all the time, and we're very happy with them. Having said that, Liberty Bank goes around to the communities in our area, in our assessment area, and we talk to our partners, our stakeholders and whatnot, and we've developed what we call our community reinvestment program, which is aimed at revitalizing and stabilizing neighborhoods in our area. So we've developed what we call our Good Neighbor program to that end, and we'd like to take a little bit of time to go over this with you. Our Good Neighbor program, again, is a program designed to help people in census tracts in our assessment area that are low to moderate income and majority minority census tracts. It is not for first-time home buyers only, so that is key. This is a program for both borrowers and people refinancing, so you could borrow up to 97%. We pay the lender PMI, and we do have a discounted rate of 50% off the rate, and there are no loan level price adjustments. It's eligible, again, as I said, for purchase or refi. You can do up to cash out up to 85%, 1 to 4 family owner-occupied homes and condos. And then it's available in the following designated areas. So you can see here on the screen, and this is available too, this deck will be available, but it's available in Ansonia, Bloomfield, Bristol, Derby, East Hartford, East Haven, Enfield, Groton, Hamden, Hartford, Manchester, Meriden, Middletown, New Britain, New Haven, New London, Norwich, Plainville, Shelton, Waterbury, West Hartford, West Haven, Wyndham, and Windsor, okay? Specific census tracts. The mortgage rate is discounted, as I said, and we'll go to single-family borrowers up to $500,000 with low down payment. And the key here is there are no income limits. The minimum credit score is 640, and first-time home buyers are required to complete home buyer education. Next slide, Pam. We also have our Good Neighbor Plus mortgage, okay? And this is designated, we picked Hartford as an area. The Hartford area is an area that needed, that was especially needed to kind of help revitalize and stabilize. We looked around and we offer the other Good Neighbor program, we have a $300 closing cost credit. We bumped the closing cost credit for our Good Neighbor Plus to $2,500 towards the cost to match borrower down payment. So that's a real key feature. Again, same program, same great discounted rates, no income limits, and not limited to first-time home buyers. Next slide, Pam. So this is a little bit different from what our what CHFA is all about, and I love our CHFA program. But when we were out there in the neighborhoods finding out what we need, we were going out to different areas, and they said these programs for owner-occupied properties are wonderful, but we need something for investment. So we came back and we quickly came up with this program. We call it our Good Neighbor Investment Program. And this can be for investors who want to finance 1 to 4 unit properties. And the key here is it could be mixed use. So in a lot of these towns we were looking at, they said, you know, we have a lot of multifamily homes, we have a lot of multifamily mixed use product, and we can't find a market for it. You know, it's too small to be commercial and the residential people can't do it. So we came up with this program. It's available for homes in low to moderate income census tracts in our assessment area, again, the same towns. It's non-owner occupied, it's for purchase or refinance. There are no income limits, and the title may be held in an LLC. So we thought it was a really great program. You know, a lot of times, like I'm from the Waterbury area, we're in the New London area talking to people, and there were those like 4-family homes, and like they may have had a bakery on the bottom and 3 families on the top. The only criteria is that it has to be, majority of it has to be residential. So in other words, 51% has to be residential and the other part can be commercial. Next slide, Pam. Then we were out there again and they said, well, that's all well and good. That's a great product, but a lot of these, you know, Connecticut has a very old housing stock. A lot of these houses, we can't just go in and purchase them. We need money to rehab them. So back to the drawing board we went, and we came up with our Good Neighbor Investment Rehab Mortgage. And again, the idea was to help invest, rehab, and revitalize these neighborhoods. It can be an investor, again, 1 to 4 unit property. The rates are competitive. It could be for mixed use. So we had this one in, I believe it or not, it was in the Hartford area. It was a man that wanted to purchase a house. It was a restaurant on the bottom, had 3 families on top. He wanted to buy it for, let's just say, $150,000. He had to put in $50,000 renovation to get up to square. We were able to do the financing up to 80%. So it was a win-win for everybody. So I know a lot of times you realtors are out there and, you know, it's hard to kind of sell these properties because they do need a lot of TLC. This might be a great property that would help in these areas. Then we also have what we call our Good Neighbor Home Equity Line of Credit. And again, this would be for a person buying in one of those particular, it's not like a piggyback, a true piggyback. It would be a line of credit that they can use for maybe home improvements after the house closes. will go up to 100%, 105% of the property value. They could use it for repairs, debt consolidations. It could be if they, once they move into the house, they could purchase some, I don't know, whether it be furniture or something like that, at a very low interest rate. It's tied to prime. So it's a nice interest rate. There's no prepayment penalty. There's no annual fee. We have all the information on file, so it's a relatively quick underwriting. So it's a nice add-on value product that we're offering. And again, it's limited to the targeted areas in our assessment area, which are low to moderate income and majority minority census tracts. Next slide, Pam. And again, as mentioned before, in addition to our Good Neighbor product, we partner with many different agencies. Again, CHFA, one of our very valuable partners. We use CHFA. We use the CHFA FreddieMac product, FHA mortgages, USDA mortgage, FHA, USDA, VA, CHFA, VA, and then we do offer multiple down payment assistance programs and grant sources. We're very successful with the CHFA DAP, the Federal Home Loan Bank Equity Builder Program. We've been doing that for years and years and years, and we've always maxed out on our allotment. So our loan officers are very, very experienced with all of these down payment sources. We do the Housing Development Smart Moves program. We do Live Where You Work, House Hartford, New Haven Livable Cities, the ECHO New London program, Homeownership Matters. And we are very quick to, if you have a grant program in some city that you want us to utilize, we get it on board very, very quickly. So we're very nimble in that regard.
And another thing I just wanted to add to that, Ann, is our loan officers really work with the clients to help them with these products, because a lot of our first-time home buyers might not have a down payment, might be lower income. And for example, we had a person in New London. They were getting an Echo home. They were a first-time home buyer, so it was a CHFA mortgage. But they still didn't have enough money. So the loan officer that was working with them got them, helped them get the Equity Builder program. So they had money for down payment. Still, they needed extra. So they worked to get them the Smart Moves, Live Where You, Live Where You Work program with HDF, because they happen to live in New London and work in New London. So it took the loan originator a lot more time. I mean, instead of just closing on the loan really quick, he had to do all this extra work to get the person in the home, where if he didn't do that, the loan would not have gone through. So, you know, our loan officers do take so much time to work with all the different agencies to help get the loan closed.
No, Pam, I agree with you. I have many of my loan officers. I work with the affordable loan officers, and many times we're structuring. It's not unusual to have 3 seconds behind our first. So we take a lot of time and a lot of effort, and we're very serious about it. And our loan, as I said, our loan officers are very experienced. We're more than happy to go out and do first-time home buyer sessions or just home buyer sessions with any of your clients, pre-quals, pre-approvals. We really work with your people to get them to the road to home ownership. And some of the things that we offer is we came up with, a lot of times people aren't even credit worthy, but we came up with what we call a credit builder and saving program, which allows people that may have bad credit to come to us and take out a collateral loan. Well, a lot of times people don't have collateral if they're in a situation where they don't have less than spectacular credit. So we actually fund the loan. We set up a CD for $1,000. We'll give them a loan against that $1,000. And as they make payments on that, we report it to the credit bureau, hopefully on time. And at the end of the loan term, they now not only have hopefully repaired their credit, they now have a CD for $1,000 that they could use. We also have individual development accounts. Pam, I think you know a little bit more about that, so I'm going to have you speak to the next 3 bullet points.
Sure. So the individual development accounts were a federal program that kind of dried up to help first-time buyers save for their home, and then they were matched by the federal government and other agencies. And when that program dried up, Liberty Bank continued it. So we partner with different agencies across the state. They have individuals who are lower income and need help with down payment assistance. They save up to $1,000. Liberty Bank will match that $1,000. We get other agencies to also match $1,000. And then those funds are directly used to help with the closing costs of their home purchase. So that's always a great program for individuals who need some extra help. And then we do, as Ann said, we do home buying workshops anytime. If you have a specific group of people, we'll just meet with them. We can do an early morning coffee home buying workshop. Now we've been doing mainly Zoom ones. We can do a cocktail hour for your young home buyers who want to know more, and do whatever is necessary. And we're really flexible with that. And the other thing we like to do, we're starting, is the Home Ownership Academy. A realtor in another market had brought it to our attention that he had some families that he really needed. So they weren't really home ready yet, but should be soon. And he wanted them to just have like a little mini academy where we could meet weekly for a while and kind of just go over all the basics of things they needed to get ready. And so we partnered with him to plan this. And in the end, they're going to have a little incentive if they attend all the classes. So, we're open to creating any type of program like this or modeling something after this one. But basically, we're here to be a resource for you. And I think that's all we have. If anyone has any questions, and I'm gonna.
Hey, well, another fantastic presentation, Ann and Pam. Thank you. Hopefully, our audience sees, what I had mentioned earlier about the affordable ecosystem, where Liberty Bank and Connecticut Housing and FreddieMac and the New Haven Middlesex Realtors, how we all partner together in this ecosystem and make things happen for the potential home buyers. And I really thank you for attending today. Hopefully you found this hour valuable. I know I did. I learned a lot. Anytime I hear Rita and Pam and Ann speak, I enjoy hearing about their programs. So Bernadette, you want to come back on? Do you have any Q&A for us in the chat room?
I don't see any questions in the chat. So anyone, if you do have any questions for Jim or Pam or Rita or Ann, please feel free to drop them in and they can answer them for you. I see everybody dropping in some email address links, some contact information. But yeah, if anyone has questions, feel free to drop them in. Jackie is asking, are FreddieMac and CHFA loans eligible for self-employed buyers?
Rita,
Absolutely.
Okay.
Yep, same guidelines as if CHFA is not involved. No problem.
Great.
And I'm sure Liberty Bank also does self-employed borrowers.
Mm.
Of course.
And if I can make one more statement, to our realtor audience out there, if you're not referring loans to Liberty Bank, please contact Pam and Ann and get their information, because that was a great presentation with some really forward-thinking programs that they're really offering to people in Connecticut. Very impressive.
Yeah, there's some great content and there's some great resources there. It's all about creating relationships, and we definitely, encourage our members to reach out and, make connections and, use these folks as your resources.
Okay. And
Amy says, Pam, I'll be sending clients your way. Great.
Awesome.
Great.
I look forward to it.
And I had included my email address for any requests for the Credit Smart train the trainer. I know I did get a couple emails, and I'll be introducing those folks to our managers here at FreddieMac who run that program. So thank you for your interest in that.
Great. Well, thank you everyone for your time. And thanks everyone for joining. As I said, we did record this, so we'll make the entire presentation available along with the PDFs, and we will send that out to everyone. So look out for your email, and enjoy the great day today.
Okay. All right.
Thank you, everyone.
Thank you, everyone. Take care. Bye-bye.
Thank you.
Bye.